The last time that we were looking at worksheets, we looked at the Analyze and Journalizing Notes and Worksheet. We looked at some of the information as far as analyzing. We also looked at looking at journal entries as far as what their format looked like. And we're going to look a little bit more at that formatting in just a minute, but I want to kind of go forward with last time we did the analyzing factor, where we looked at what our accounts were, we looked at whether they were going to be a debit or a credit, and so we have that information down. Today, what we're going to be looking at is the second step, which is to record those particular journal entries. And so when we record those journal entries, we record them in what we call our general journal. And our general journal is where our transactions are recorded. They are recorded in chronological order, and it's also known as our book of original entry. Last time we looked at a simple entry where it involved one debit and one credit account, and that's really what we see here is that we have one debit account, we have one credit account. Again, debits are always going to be on the top, credits are always going to be on the bottom, but we only have one account each. A compound entry looks at where we have 3 or more accounts that are being used in one journal entry. In the compound entry, we look at our debits, and all those would be listed first, and then our credits would be listed, all of them would be listed next, and our total debit amounts must equal our total credit amounts. And so when we look at the formatting for this, we're really going to see this particular one formatted in entry number 2. Now what I'm going to assume is that we are going to just use a date of 6/1 for all of our entries, just to kind of keep everything nice and even and everything the way that it needs to be. I have given you a template to follow, which looks at the Journalize template. Is we have our date, we have our accounts, our debit column, our credit column. So when we look at this, in that first column we will put the date, but it's only going to go on the first line for the journal entry. We would then list out our debit account. So in this case, our debit account, and the one we have, is cash. So I would come in and I would put cash down. Now the key that we have to think about next is that when we look at this, our credit account names need to be indented. So you need to kind of move over and not put it directly underneath it, because it is the credit account. The credit account here is the capital account, so I would come in and I would put that capital account in. And the amount that I'm looking at is $150,000. And so that would be placed in. So things to really look at: notice there is not a dollar sign. There should never be a dollar sign when we do journal entries. So do not put dollar signs in journal entries. It will be wrong. Points will be taken off if you do that. And you also need to make sure you are indenting over when you look at your credit accounts. So the next one we look at was where a business purchased land of $10,000. It had a building on it that was valued at $60,000. And so we're going to put our date in on that first line, and then we look at, we have debit accounts of land and building. So I would come in and I would put the land right underneath it. I'd put the building, because both of those are debits, and our debits have to go first and they will line up. The credit account that I'm going to be using, and I do need to indent over, is going to be that cash account. And right now I'm just kind of taking a blue pen and moving it over so you can just remember that it does have to be indented over. All of these are lined up, but then this is going to be indented over is what we're going to be looking at. So the amount of the land, it was valued at $10,000. Building was valued at $60,000. And so that means our total purchase price here was $70,000 for that particular journal entry. Our next journal entry, we have supplies as our debit. We have accounts payable is our credit. So we put the date in on just the first line only. We would have supplies on top as our debit. And then we would have accounts payable. And so what we would be looking at is $200 as our debit. And then $200 would go into that credit amount. Notice again, I did indent over when I was looking at that particular account. All right, and just to kind of, hone that in, that is an accounts payable, and that's what the AP stands for. So just in case you were wondering, AP is accounts payable. Whenever you see me write AR, that is accounts receivable. So just so you know what we're looking at there in this particular category. So then we get to our next entry. And when we look at our next entry here, we see that we have cash as our credit and prepaid insurance would be our debit. So we come in, we put 6-1. Our debit account is prepaid insurance. So I would put the prepaid insurance out. That is $1,200. The other side of this is going to be that cash. So I indent over, put cash, and in the credit column, I would do the $1,200 for that particular journal entry. So remember, realistically, we would do the Analyze and the Journalize together, but I just really wanted to go through and show you that analyzing feature and then how we just take what we did in the analyzing and just make the journal entry. So if we can get our analysis correct, the journal entry is pretty simple. You just have to remember, don't put dollar signs and always indent your credit account. And debits go on top, credits go on bottom. For 5, we see cash is actually going to be our debit account. So I can go ahead and put that out there. And our other account that we're looking at would be either unearned revenue or unearned fees. So I indent over and I'll look at unearned revenue. Also could possibly be unearned fees. So I'm just going to kind of put it that way. Either account works. You just really need to look at your your chart of accounts to see what accounts we're actually using. And that would be for the $1,000. The next entry we look at, a business is performing services for a customer for $500. So cash was our debit. So we would come in and put cash. The other side of it is we performed a service. So that would be fees earned, or it could be service revenue. So if I come in and put fees earned, I'm going to slash that with service revenue just so that you can understand that it really just depends on what your company uses as to what you're going to put there. And different companies call it different things. Some companies will call it fees earned. Some companies are going to call it service revenue. So whatever your company calls it is kind of what you would be putting there. And that is for $500. Okay. A business pays rent for the month, $1,000. So we know cash is our credit and rent expense is our debit. So we put the date on the first line. Debit is rent expense. $1,000. And the other we indent over, we put cash for that $1,000. And then we have that particular journal entry complete. Next thing we come up to, cash is our credit and equipment is our debit. So 6-1, we would have equipment. $300. We would have cash, $300. Number 9, business performed services for $3,000 on account. So with this one, we are looking at our debit would be the accounts receivable account. So I put the date. I'm going to put accounts receivable in for $3,000. And the other side of that is going to be that fees earned or service revenue item for that $3,000. And that would be what our credit was showing as. Number 10, cash is our debit. So here we have cash, it'll be on 6/1, and that would be $1,000. So this particular customer is paying on their account, so it would be reducing their accounts receivable amount. And that's exactly what we said, that accounts receivable would be the credit, cash would be the debit. And so that's what your journal entry would look like. Number 11, no entry. So we don't have anything there at all for number 11 because there's no entry. I mean, you wouldn't write no entry. You would just not do anything for it. But just so that somebody doesn't think I missed something, I'll just go ahead and put that in. Number 12, business pay secretary salary of $400. Cash is on the bottom as the credit. The debit is going to be salary expense. So I come in, I have salary expense. I'm going to have cash. Notice I indented over, and that was $400. The next entry, cash is the credit, and accounts payable is the debit. So 6/1 of accounts payable for $200, and then I'm going to have cash. So I indent over, and I put that in as well. And the last one, we have a owner taking a draw from the business. So we put our date in. That drawing account is going to be the debit account. Cash is our credit account, and that was for $1,000. So what we see in these transactions, we see if we analyze them, then we can just come in and we'll be able to do those journal entries. Again, the thing to remember is that your debits always on top. Your credits always on bottom. So if I had multiple accounts, what I would be looking at here is I would have the date, I would have the debit account, I would have whatever other debit accounts, I would have then my any credit accounts, and I mean I could have more than 4 if I wanted to. This is going to go in my debit column. These amounts would go in my credit column. Okay, the thing that I want you to see here is that all of my debits are on top and they all line up. My credits are on bottom and they all line up. So they should be coming together, okay, is what we look at. And that is really the basics of how we do a journal entry. In class, we will also look at the posting as well as looking at some trial balances, and we'll have it on Blackboard as well.